Brian, you're economic council director. You're not really on the political side of the White House, I don't think, and the strategists on the political side. So I don't even think it's fair, really, for me to try to grill you on this. I want to give you a pass. If you just don't want to comment on this at all as the economic director, because it's really more of a political, a fairness issue, I think, I will let you do that. Or do you actually want to say that there are economic benefits to this?
Well, let me try to put this in context, Joe, and thanks for having me on.
You're welcome.
I think if we're talking about any of these conversations, we have to start by recognizing that we are not in normal times. We are in a time of war, and the global environment and the global energy markets are fundamentally affected by that reality. And the reason why we have had the supply crisis that we have had, and the reason why we have seen price increases that we've seen globally, is at the core because of the war and Putin's actions. And so companies that are in a position where prices have increased dramatically have reaped excessive profits from that windfall. And so, the question that the president was raising yesterday and the choice that the president was putting forward yesterday was that those companies, in an environment as unique as this one, where this is not about investments made years ago and returns on innovation, but instead a unique situation driven by a geopolitical crisis because of war, those companies have an obligation to act in the interests of not only their shareholders, but also their consumers and also the country. And so that was the point that the president was trying to make. The issue of a windfall profits tax is one that you've seen a number of other G7 countries move forward with. And the president is clear. What he would like to see is for these companies to actually step up and, for example, reduce the historic margins that they're charging in between the wholesale price and the retail price. That would be good for consumers. And in the long term, it really wouldn't have a long-term impact on their profitability.
But, Brian, in the history of the world, have you ever seen a situation where if you tax an industry or tax something, you actually get more of it? The quickest way to get less of something is to tax it and to regulate it. So we're already, draining the SPR. Some people think that's okay. Other people think that's not very wise at this point. So why make it harder for the oil companies to invest in more production by taxing the windfall? So you call these windfall profits?
Well, a couple of points. First is on the Strategic Petroleum Reserve. Not only is it still half full, but we last week, as you know and you talked about, announced a plan to send certainty to the market that we will repurchase, and the Strategic Petroleum Reserve will repurchase oil when the price gets down to around $70 a barrel, which not only makes sure that that asset is stronger on the other side of this outcome, because we'll be able to repurchase more oil at that lower price, but also gives the market some certainty, something that that market actors have been asking for some time. But again, I just want to be clear on what the president was articulating yesterday. He was articulating a choice that the companies have for months said that the better outcome for trying to address these historically unique circumstances are for private sector actions where they act on their own. And the president was urging them to do so. And something like the big spread between wholesale prices and retail prices, where that profit margin on every gallon of gas being sold is at completely historically unprecedented levels, that's something that could be addressed short of Congress taking action. The president has for months been clear that's the better outcome here, and he was just being very direct about that yesterday.